Everyone, welcome to my update for 2024 and also going to outlook for 2025. The year's not quite done yet. As you can see, I still have my Christmas tree up. So Christmas is not even quite come around. But I want to give a recap of everything that's happened since 2024 and also why I'm so excited for 2025. But before we begin this, do remember that I am not an employee of eToro. And this is not financial advice. Do seek a financial professional should you need advice on direction or how to take a portfolio, basically. Yeah, and so without further ado, let's get into it. Mm. Okay, so today's agenda, we're just going to go through a little bit about my investment objectives. I want to go through this every single update that I do so that people are reminded. If you're new here, you understand what we're doing and why we're doing it. Investment process, how we think, a little bit about me, after that recap of 2024, and then following after that, outlook 2025. So before I begin this update, I just do want to give a big thank you. In 2023, when I started this, or when I was elite pro popular investor, and 2022 was very, very hard. I actually lost a lot of assets and a lot of copiers. In fact, I was nearly dropped from elite pro to elite, which is not a big deal. It's just a tier thing. But you guys really stuck it out with me through the very, very hard times, and I really, really appreciate it. In fact, we can see from the stats on the screen, I actually have less copiers or slightly more copiers now, but my assets have grown by about 60%. And the reason is, one is because of just capital growth. You guys have been with me for a while. So last year we did like 24%. This year we did another 20%. Around 45% of that can be attributed to you guys sticking around. Another 20% is just you guys just increasing your copy. So even though copiers have not increased that much, my assets have increased by quite a bit. And I really, really just appreciate you guys so, so much. Thanks for being here. I also do want to thank the community, you guys, content creators on eToro, Social Trading Vlog, Felix, and Daniel. You guys are posting content all the time. You guys don't ask for anything in return, but you guys are great. You're doing such a great service. And I do believe eToro is going to become really, really mainstream. And once that does, I really hope you guys get recognition, especially Felix, Andrew. I hope you're watching this. I hope you become a PI one day. That's my hope for you, but I leave that to you. I really appreciate your content and all the work you've done. Yeah. So investment objectives. I just want to go over like why I started eToro. So I don't talk about this every quarter, but I'm gonna start doing this going forward. You can see here a picture of my family, and this is before my dad passed away. And I'm very close to my family. So what happened was when my dad passed away, he asked me to help my mom look after money. And because I was in the industry, I knew a little bit about how the banking system worked. And you have connections here and there. I thought I could make this work. But what I realized is that the choices offered to most investors are very, very minimal and very, very like kind of simple, to be honest. So they're very sophisticated ways of managing portfolios, but these aren't made known to regular investors, or they're hard to find. And most people are selling things for fees. They're not really selling because they want you to do well in life or anything like that. They're just selling you based on fees. A great book on this called "Who Stole? Where's My Customers' Yachts?" And this talks about the business of Wall Street and how everyone's just selling, selling, selling. And I didn't like this. So when I started eToro, it was really because I had this pain of trying to manage the portfolio for my mom and realizing that, everything is so unfair for regular investors. And I didn't want anyone to go through that same pain that I went through. And when I looked at eToro, I found like almost the perfect solution, right? Because even though I'm like kind of marketing my services in some way, I also do put my own money at risk. And for elite pros, we have a certain minimum to always maintain, and that's 100% fine. But we should always like show you exactly that if you lose money, I lose money, and we both feel pain. at the same time. Also, we don't get paid for performance fees, which means we don't take extraordinary risks. Like, if someone gets 20% of performance fees, means if they make 100%, they take 20, they keep 20 of it. And you get 80, I get 20. That encourages very risky behavior because, the more you make, the more you take back, right? So eToro doesn't have that, which I think is really good because that then allows for longevity, I feel, in the system. And especially for the way that we manage money, it makes sense to just be safe. And I really like that. Okay. So the problems that I hope to address, in my mission on eToro and also on YouTube, on whatever social or generally, we want to give these opportunities to like non-rich investors. One simple example of this is like value investing, right? If you're a retail investor and you want to find value investor managers, of course there are ETFs out there and all that, but within value investing, can you find like merger arbitrage? That's very hard to find. Within that, can you find like spin-offs or managers who look at spin-offs? It's also very hard to find. They tend to be algorithmic type strategies within the value space, which are much more naive than the rest of that, because those are more sophisticated and therefore have access only to sophisticated investors. Again, we mentioned just now on capital at risk. So I have money in eToro. If you lose money, I lose money, and we both feel it. eToro is also completely truthful. I can't lie to you about anything because all my trades and all the records I kept by eToro. I have an 8-year track record right now. It's gonna get to 9 years soon, and in those 9 years, it's like I can't lie to you about any point of time about my record. So eToro is such a great solution, and I believe that eToro is gonna like overtake a lot of fund management in the future. There's so much room to grow, and I've been on this journey for like 7-8 years, and I'm so happy with it. It's come such a long way. It's growing so fast. I'm so happy that eToro has given me this opportunity to do this, and I'm so happy that the way it's growing. So I'm very excited for the future of eToro. So a little bit about me and my background. So I am the #1 most copied in Australia and Asia. I'm number 6 in the world right now about number of copiers. In terms of professional experience, I've worked as asset manager for 3 years. I've worked in investment banking for 3 years. So I started my career. And in between, I worked at a crypto professional. I've exchange experience, business development, and regular just coding development, and also financial services within the crypto space in those 8 years. Trading experience wise, I'm 16 years. It's actually slightly more, but the reason why I say 16 is because on my 21st birthday, I remember bringing a check from the bank to the brokerage and saying, can you open an account for me? Because at 21 years old, it was legal for you to open it without your parents' permission. So on my 21st birthday, that's the first thing that I did. True story. And I have a master's degree in finance, a bachelor's degree in accounting, and diploma in banking finance, and the CISI, which is the qualification that all eToro elites and elite pros have. And at the end of the day, as I say in my bio, I don't think any of it matters. Matters to a certain extent, like you have some basic foundation, but application of it is more important. And incentives matter as well because you can be a professional, trader or whatever have you, taking enormous amount of risk and have been very, very lucky for a few years. And you come on the platform and you're like, I'm going to be lucky for the next 3 years. And you realize that that's just not the case. So yeah, I think some of it matters, but not always. You have to add everything up. And that's where it gets interesting for me on eToro. Okay, a little bit more investment process. So I've talked about this before, but generally I get a lot of ideas from a lot of places. So screeners, podcasts, generally anywhere I read them, these are ideas. So these are idea generation. It goes into idea framework. So I mentioned those sophisticated bucket strategies that we mentioned just now, like spin-offs, that falls into one bucket, certain value falls into another bucket. Long short, things like that, they fall into certain buckets, right? And I have a filter for this. It's called the don't be stupid line. So a lot of things that, kind of like interesting, but very hard to express. It goes through the don't be stupid filter and we try not to do it. So an example of this is like long short. Unfortunately, we can long short on eToro. We can long short on eToro, but the leverage given to us is quite limited. So on the don't be stupid, it will tell you that you can't really do it, right? Because you don't have the same tools, so don't do it. So this don't be stupid line. The next idea after that is after we bucket it is thesis validation. So for example, we can be long like Chinese stocks, right? But am I like eating too much of my own like cooking? Is there someone else who disagrees with me? So it's a bear case. So then we have the bull and the bear, and then we debate it, or I debate it, and we try to find that scenario where we're like, okay, this is a good opportunity, but there are risks. Okay, then we risk manage accordingly after that. So that's the idea section of it. So it's a good idea, but it may go up, it may go down. There's some risk here and there. So how do we manage the risk? That's step 5, which is risk management and monitoring. So this is kind of my idea framework. I will do a video on this like one day, like on my full thesis, and maybe give one example, and that would be great. But this is generally how we do it. And the other line that I have in there is the risk symmetry line. I don't like risks where the downside is kind of large, but the upside is kind of limited. So an example of this, or questionable upside, an example of this is like if NVIDIA right now is one of the biggest, most traded companies in the world, worth $1 trillion and whatever. And its upside, I don't really know. Its downside, it's also, I don't really know, and I can't hedge it. If I was working in a professional setting with like options and things, derivatives and things like that, I could just hedge it so that my downside is limited. But in this case, I can't, so there's no sense for me to kind of go into those trades because the risk symmetry is just too large, even though the momentum is great. Okay, so in terms of portfolio management, we also follow the Ray Dalio rules, the Holy Grail rules. And his is like 15 to 20 bets of uncorrelated assets. So uncorrelated means that, if the whole stock market, or let's just say I have China and I have dollar Japanese yen. So do these things naturally correlate? The answer is to a certain degree they do. When risk is on or risk is off, sometimes they move in conjunction. But the factors that affect these, like BOJ, Bank of Japan, does it really affect China? Not as much. So these become a low correlation asset kind of diversification. That's what we look for in all our trades. So yeah, that's the risk diversification. Okay, great. Now coming to performance review of 2024. And I feel two ways about this year. One is very disgusted, like a lot of things went badly for us. And I'm going to show you that in a bit. But at the same time, I'm very, very thankful that we are here and we actually made a decent amount of money. So yeah, you can see here, this is taken on the 30th of December. S&P is up 23% year to date, 23.7% year to date. We made 20.11. Depending on when you're watching this or when this comes out, these numbers may have changed, but yeah, I broadly expect them to be around underperformance about 3 to 4%, generally speaking. This is not great. I don't like underperforming the index, but that's what happened this year. As you can see from this chart, or you can't really see because my face is blocking it, but the 1 year return, there's like we did underperform by 3.59%. Over a 3-year period, we actually outperformed 8%. Now, this may not sound like a lot, but I always believe and strong believer in this, like risk symmetry is very, very important. And I took when you take 3 years, is during the 2022, so the market fell by 20%, right? 19 to 20%. And we fell by 11.8%. So much, much less. And I believe like controlling a downside is just as important as making money. And a lot of people ignore this part of the equation. And this is kind of why I believe in this risk asymmetries. And of course, over a 5-year period, because we had that crypto bull run in 2021, in 2020, we did really, really well. We did 71 and 68%. We are just blowing S&P out of the water, right? But again, when it comes to the S&P 500 or benchmarking in general, I don't believe it exists. Let me tell you why. If you benchmark like my portfolio against the S&P 500, you're assuming if you don't invest with me, you're putting all your money into the S&P 500. And this, of course, means that you are only investing US stocks, no international stocks, no other sophisticated strategies, just long only the S&P 500. So our strategy is to just buy stuff that makes sense and ignore everything else. Like, we don't care if it's in the US or we don't care if it's international. We just try and buy stuff that makes sense and risk manage accordingly. And when you say S&P 500, benchmarking is useful if you only invest in US stocks. So you're comparing like US stocks versus a manager who only invests in US stocks. This is not the case with us. Are there benchmarks you can use for our portfolio? It's also difficult because we do crypto, we do currencies, and we do this and that. And I've tried to do a composite basket of different benchmarks, but every time I talk to people, they ask, what's your performance versus S&P 500? That's the only benchmark that anyone uses, and I have no idea why. It's kind of illogical, but because of the way the market's designed, because of years of experience that people have, they're just stuck on this idea of S&P 500. So therefore, we benchmark against, or we compare performance against S&P 500. So in 2024, actually, a lot of things went wrong for us, as I mentioned just now. One of it was our merger arbitrages. Like, it was catastrophic, right? JetBlue Spirit got blocked. Amazon iRobot failed. Tapestry Capri also got blocked. So these three merger arbitrage failures in total attributed about 7% loss in our portfolio, thereabouts. And if you think about it, like 7%, if we had 7%, we wouldn't be comparing S&P 500, we are outperforming, right? But having said that, like these sophisticated strategies last year did really well for us, and we wouldn't have done so well last year if not for merger arbitrage. So this is not to say we don't ever do merger arbitrage, we just risk manage accordingly. But having said that, one of the reasons why risk or merger arbitrage didn't do so well is the FTC chair, which is Lina Khan. She actually was very, very tough on these anti-competitive behaviors. And because of that, she blocked a lot of deals. And that caused us to lose, a little bit of money. But having said that, I think next year might be pretty good because if Trump replaces her, then more deals will get pushed through, and therefore, this merger arbitrage is coming back. So this might be something interesting to watch out for in 2025, but we'll see. The other thing, if you look at all our big bets, so DAC is Daniels. It underperformed the S&P by about 20%. China, of course, underperformed by 9-10%. Oil underperformed by 25%. Bitcoin, of course, outperformed, but we'll get into that later. And the Russell, which tends to be the smaller cap stocks, also underperformed. So all the major factors that we invested in actually all didn't do well. And that caused a huge lag in our portfolio. But what really, really saved us is actually the smaller bets. Okay, before I get into that, even some of the bets we got correct. So I posted this video on YouTube Shorts on V-Shaped Intertechnologies. It said that, we want to buy AI. We like AI. But having said that, NVIDIA is too expensive. So we rather buy V-Shaped Intertechnologies because it's a better value play. And we were right. You can see here in the middle screenshot, 26 November, they announced that, they want server demand. And V-Shaped is going to benefit greatly from that. So we were correct on the thesis and the idea. However, if you look at the next screen after that, NVIDIA gained 17.8% in the last 6 months, and V-Shaped lost 18.91%. So even though we got it correct, you're talking about 35% difference in buying NVIDIA versus V-Shaped Technologies, which is just insane. You can get the thesis right, you can get valuations right, you can get your homework right, but you still lose money, and that's just the nature of the market. But things that did go really well, we managed to make some money off PHIN, which was a spin-off from last year. We allocated a large portion of our portfolio to it, and it gained like 40%. We did really well, we cashed it out. So that's plus 4% on the portfolio. Currency trades did surprisingly well for us, 2 to 3%, which may not sound like a lot, but we allocate between 10 to 15% of our portfolio, and that attributed to the 3% means that it generated pretty decent amount of income, yeah? And the last one is Summit Therapeutics, which is a biotech play. And the way that you invest in biotechs is completely different. Oh, pharmaceuticals, sorry. It's completely different from the way you invest in regular stocks. And I won't get into it, but it did really well, so we gained 4%. So overall, you can see just from these trades, we gained about 11 to 12%. And this really helped our portfolio. So overall, the performance this year, plus 20%. Pretty good, right? But versus the index, you're like, may not be as great. But again, like we mentioned just now, we don't really believe in indexing because there are a lot of assumptions baked into, comparing yourself with the index. And they may not be the right assumptions, especially investor. If you invest all your money into the US stock market and you're not a US citizen, I mean, there's certain assumptions that you're making that are a little bit tricky. I won't get into it, but I did have a video on it. I'll show you in a bit. Okay, so for 2025, how are we looking? I am really, really excited for 2025. I think 2025 is going to be a great year for us. Overall, I think the SPX or this S&P 500, which we talk so much about, is not going to do so well. I'm always bullish on value stocks, so value is always up there, so continue to be bullish. China, I'm bullish for now. Crypto is, I'm not very sure, to be honest. And FX and macro, I think is going to be great. So S&P 500, this is just not my opinion, just not only my opinion, but you can see here that, Goldman Sachs says that, over the next 10 years, performance of the S&P 500 is going to drop from 13% to just 3%. So that's a huge hit. And one of the reasons that they said is going to underperform is extreme concentration, the S&P 500, which again, we have mentioned is because of the Mag 7s. So Goldman Sachs agrees with us that Mag 7s is too much of the index, and Goldman Sachs agrees with us that S&P is not going to do so well over the next few years. So that's great. We know where we're headed. So the equal weight could outperform the market cap weight. And this is again, I covered in a video I did previously, I'll show you in a bit, by as much as 8% throughout the next 10 years. So we are probably going to do really, really well as long as we stay out of these Mag 7s and really focus on making good active stock picks. So this is a video that I did about 5 months ago where I compared and told everyone that, it's not so good to invest in the Magnificent Seven. And 5 months ago when I made this video, I have been absolutely wrong. Looking at the chart, the Mag 7 has outperformed the S&P 500 by 13%. So it's a huge amount, right? And a lot of returns from the S&P 500 can just be explained by these Magnificent Seven stocks like Google, Apple, Amazon, Nvidia, things like that. But again, because it's so concentrated in the S&P 500, it's going to cause some problems over the next 10 years. And that's exactly what Goldman Sachs says. And I already said, this is going to be a problem. So yes, we were right. So value has underperformed S&P 500 and global has underperformed S&P 500. And these are areas that we're very focused in, value and, around the world. So we're going to continue to look at these opportunities, and I think they're going to be great for us. In terms of value, Daniels is one of our biggest positions, and I wrote the thesis on this and presented this in the last investor call. And when I look at the numbers now, they actually haven't changed that much. They're still like trading at a really good discount to fair value. So, even though it has appreciated by just a little bit, there's still a lot more room for it to grow, and maybe the market's not seen it yet. Maybe we're wrong on the timing of it, but I still believe it's a really good stock to hold, and I'm going to continue to hold it. The other thing I wanted to mention is that Warren Buffett also thinks that the market may be slightly overheated. He has one of the biggest cash holdings in percentage terms in his portfolio. So people have been noticing, and Warren Buffett, arguably the best investor in the world, says something, we should listen. Okay, when it comes to crypto, I think the answer is it might just not so simple, right? In 2019, when COVID was happening, we knew interest rates were going to get cut. We knew Ethereum staking was coming out and it's going to provide 5 to 6% or 4 to 6%. And it was quite an easy bet because we knew that, would you rather hold Ethereum and stake it and get 4 to 6%? Would you rather hold treasury bills, which give you like 0 or 1% or whatever? And that was easy for us to bet. In 2023, when we saw the Grayscale Bitcoin ETF trust, it was trading at a discount to net asset value, and we expected some regulatory easing. It wasn't easy, or wasn't that easy a bet, but we had some risk allocated to that because it was kind of a good bet to make. Like we said, risk asymmetries is important, so we saw risk asymmetries there, and we placed our bets there. And in 2024, we looked at it in like Trump rally. If Trump wins, certain things are she's so pro-crypto that regulatory is gonna allow it to just rise. And sentiment, of course, was positive. So we placed our bets into crypto before the Trump rally. We even bought Doge. But again, it happened and that's over now. So 2025, what happens? I don't know. I don't see the new catalyst coming in. I'm still long Ethereum. I still like Ethereum, but I don't see a catalyst to make it like explode how it used to. Like we had NFTs, we had DeFi summer, we had a lot of things going on for crypto. But for 2025, I don't know what that is. So we'll allocate some, but not a whole lot because it's not an obvious bet anymore. For macro, I think it's going to be really, really interesting because there are certain things like, Trump loves tariffs and he doesn't like currency manipulators. He says tariffs are the most beautiful word in the dictionary. And he says he doesn't like currency manipulators. He said this 7 years ago that he slammed like China and Japan as currency manipulators. And if you look at Japan since Trump has left office and came back, it's actually like kind of depreciated around 50%. But is he going to allow this to continue? I would think not, because he looks at this and like, this is not a very good deal for the American people. This is probably going to ask them to adjust it down. Maybe we have the Malago Accords. This is something akin to the Plaza Accords that happened many years ago. But it's going to be interesting. So we are like long yen, short US dollar. Previously, we were long dollar, short Swiss franc for different reasons. But now the macro has changed, so we changed our positions, and now we are short dollar, long yen. And of course, for China, Howard Marks is such a great investor, and he says there are bargains for investors in Chinese assets. We had a little bit of a pump this year when there was a little bit of optimism in China, but because of reasons that I covered on my wall, I thought it was just short squeeze. We closed those positions and reduced our risk. That has retraced almost completely, and it's back to where it was. But we actually managed to take some profits, which was good for us. But having said that, we still think there's a lot of upside for China. It's gotten so beat up in the past few years that valuations are really, really cheap. And like how Mark says, these are bargains, right? And China is signaling for like stimulus before like Trump comes into office, and that should help the economy grow. And if Xi Jinping and Trump can get along, maybe they cut some kind of deal, this may be positive for China. So there are a lot of factors that may lean in China's direction, and I'm quite positive on them. So hence, I'm long China. Okay, so in summary, I am bearish the S&P 500. I'm always bullish value, so I'll continue to be bullish value. Bullish China, not so sure about crypto, and we like the opportunities in FX and macro. So overall, I'm really excited for next year. I think next year is going to be a really, really good year for us. And I can't wait to get started. We still have a lot of cash in our portfolio, but I'm going to deploy that primarily as the year starts, because that's when investors come back. In the last 2 weeks of the year, generally, I try not to touch portfolio assets. Reason being, a lot of people are on leave, a lot of people on holidays, so a lot of weird things can happen in the market. Earlier in my career, the last 2 weeks is just no trade zone. So we're going to stand pat for a while. But as January rolls around, we'll start deploying assets, and it'll be great. So, yep. So that's it for my investor updates for this year. Thank you guys so much for sticking around and sticking with me throughout this year. Really hope that you're happy with the 20% profits we back. We're going to control downside as always, and wishing you guys Merry Christmas and Happy New Year.